So I'm going to go through some of the more unusual deadlines for individuals and trusts that quite often people aren't aware of, and they end up getting missed just because people aren't quite aware that they should be picking up on them. I'll go through the issues for the potential deadlines for trusts first. One of the main ones is related to inheritance tax, because it's 10-year anniversaries. So because it's only every 10 years, it's one that's very often missed. If there is a trust that's potentially liable to inheritance tax, these are relevant property trusts, but this can apply to discretionary and potentially interest in possession trusts, depending on the nature. Then these are liable to 10-year charges, potentially liable to 10-year charges depending on the value of the assets within the trust. When a 10-year anniversary arises, an inheritance tax return needs to be submitted within 6 months of the 10-year anniversary, and any inheritance tax liability arising needs to be paid within that same period. If there are any capital distributions from a trust, then these are also potentially liable to exit charges for inheritance tax purposes. Again, the deadline for submission of IHT returns and payment of any IHT liability arising is also within 6 months. Another one for trusts, which is more recent, is the trust register. All trusts which are liable to tax in a certain tax year, whether that's income tax, capital gains tax, IHT or potentially SDLT, they will need to undertake a trust register update by the 31st of January after the end of the tax year. So it's the same as the self-assessment deadline. These need to be updated whether or not there have been any changes to the trust, and this is in terms of details of the trust assets, the trustees, the settlor, or any beneficiaries. Moving on to individuals, 31st of July, which is when the second payments on account towards tax liability for the year ended 5th of April 2021 are due. It's important to make sure that you make these payments. Although there might not be any penalties for late payment, interest will accrue, and it's a good opportunity to think about whether your tax liability for the tax year that's just gone might be lower than for the previous tax year. If that's the case, then there might be scope to reduce the 31st of July payment if there is genuinely going to be a lower tax liability. If you reduce the payment to more than your liability turns out to be, then there will be interest to pay on late payment. Another one that's often missed is the 5th of October deadline for notifying HMRC that you need to complete a tax return, if a tax return notice hasn't already been issued to you. If you don't comply with this deadline and a tax return is late, HMRC can issue penalties for failure to notify. These penalties are actually tax geared, and they can be a range of penalties based on your tax liability for failure to notify. So it's quite important to make sure that you're aware of this deadline if you're going to need to complete a tax return. Another one that's important to people who have tax liabilities but also have PAYE income. If you submit your tax return before the 30th of December after the end of the tax year and your tax liability is below £3,000, you may be able to get that tax liability collected through your PAYE coding notice for the following year. HMRC are quite strict about this deadline, despite the fact that it's before the usual self-assessment deadline. They say that they need to have this information before the 30th of December to be able to update PAYE coding notices. For anyone who might have pension annual allowances charges, and they might want to think about asking their pension scheme to pay that charge, the 31st of July after the self-assessment submission deadline is the deadline for electing for your pension scheme to pay that liability. If you are going to think about this, it's worth speaking to a financial advisor with regards to the future impact on the pension scheme and your future entitlements within the scheme, because it can affect future pension entitlements.